This particular one, I'll be talking about the General Electric's earnings report for Q1 2021. Of course, this is a day we've all been looking forward to, especially if you invest in General Electric. And I've covered this subject quite often, especially in my last video. I covered it as well, telling you what to expect and how, if you trade the stock, how you could go about trading it. But of course, I'm not a financial advisor, so it's up to you to make your own decision on if you want to put your money into it or not. I just concluded the earnings webcast and have taken some notes to cover some of the information that I would like to share with you from that earnings webcast. So please stick around, and I hope that you find value in this video. And if you do, don't forget to give it a thumbs up. And also, if you haven't subscribed to my channel yet, feel free to subscribe by hitting the red button below. If you're new to my channel, my name is Steven Ojo, and on this channel we talk about aviation and finance. So if you're interested in any of those, again, subscribe. And thanks for doing that. So one thing I'd like to set straight is that the quarter resulted in a net loss of about $2.8 billion. This net loss is a bit diluted because we have a lot of things going on in the background. GE is preparing itself for the future by this restructuring going on. And unfortunately, the fact that they are still in the process of getting rid of some of these businesses that are not profitable, that held GE back for a while, is what is still impacting their numbers. Of course, aviation resulted in a much wider loss because the industry, took a plunge due to the pandemic. Another important factor in the finances of any company is free cash flow. GE had a negative free cash flow of about $845 million, just shy of $1 billion. That was a very disappointing number, to be honest, because free cash flow determines how well the company manages its income and expenses. And of course, if you have a negative free cash flow, that means that you are not managing either you're not making enough money or you have too much expenses. So at the end of the day, this says a lot. But like I mentioned, there's a lot going on in the background that is causing a lot of drag on this company's financial report. However, a few good things are the adjusted earnings per share was about 0.03. And this is good because that means that overall they reported a profit, but it is an adjusted value. What makes the difference between an adjusted number is that the adjusted numbers will include unusual, maybe expenses, unusual sales of, maybe property or business. If those businesses or those losses were not recognized in their numbers, they would report a profit, or they would have reported a profit. However, that doesn't mean that the company did not net a loss for the quarter. Now, one good thing also is the fact that they paid about $4 billion off on their debt, and this is a good thing for the company. Remember, for the past 3 years, GE has paid off about $70 billion in debt, and this is something that I believe is working in favor for this company's future. The future is very important. Remember, I always mention that if you're going to invest in certain companies, always think long term, and GE is one that I believe holds that ability to survive long term. There are 4 major businesses right now, which is the power, the renewable energy, aviation, and healthcare. Out of those 4, the most profitable one is usually the aviation, followed by the healthcare. But this quarter, of course, the healthcare performed much better than aviation. Renewable energy and power struggled to perform well. But 2 good things came up for the power and renewable energy. If we look at the industrial segment's results, for power, the segment margin was about negative 2.2%, but had 110 BPS, and year-over-year organic growth was about 110 as well. For renewable energy, it was down 7.2%, but year-over-year organic growth was about 310 basis points, which is about 3.1%. Now, the point for mentioning these 2 aspects of the business is this. Generally, Q1 happens to be one of the slow quarters for most businesses. Even though those sectors didn't really perform well this quarter, these 2 sectors, the power and renewable energy businesses, grew in terms of their segment itself, in just the business itself. That means that they're doing some things right in that business. For the renewable energy that had about 310 BPS, one of the things that they mentioned was the ability to cut costs and obviously apply the lean strategies. Of course, like I said, it still didn't result in profit because they had a segment profit on negative 0.2, but there was a lot of growth in that business, which we believe will add to the company's future profitability overall. As long as they keep restructuring, as long as they keep paying down debt, as long as they keep applying lean strategies in their businesses, I believe this will perform well long term and they will turn profits. But like I said, Q1 is generally a very slow quarter for businesses in general. With that said, I have to say something about their power business. The power business focuses on the gas power production, steam power production, and nuclear power production. Now, the thing is that I believe the world is shifting towards renewable energy. They're shifting away from natural gas and they're shifting away from coal and things of this nature. So what I believe will likely happen is that power sector for GE could remain slow, but renewable energy, aviation, and healthcare, those three will be strong areas for GE in the near future. When I say near future, I'm talking about a year, 2 years from now, especially aviation, which is already rising in recovery. One of the things that was mentioned by the CEO was the business deals that GE is already undertaking, like supplying about 100 commercial engines to Scandinavian airline, and also the Southwest deal, which I already covered on this channel, to supply the LEAP engines as well. And the thing is that, as we have mentioned, aviation is a strong factor in this business. And as long as aviation starts to recover and continues this trajectory of recovery, I believe that General Electric will perform really well. Now, one aspect that I would like to touch on is their free cash flow again. They already mentioned that for the quarter, they had about $845 million negative free cash flow. However, they're still sticking with their free cash flow guidance of about 2.5 billion to 4.5 billion for year 2021. This is something that I believe is very optimistic. If you guys already recorded a negative free cash flow of about 845 million, I'm really looking forward to how quickly this, they can meet up with this guidance that they've given out in March of about 2.5 to 4.5 billion. One other thing I'd like to mention is the strong liquidity of the company. The company, GE, started the year with a liquidity of about $37 billion. Right now, they still have a strong liquidity position of about $32 billion. So that is impressive. Now, overall, I believe that the main problem GE is having is that they are in this process of restructuring the business. And as long as they keep up with this process, remember, GCAS deal resulted in a loss, which was reflected in that 2.8 billion net loss for the quarter. So that GCAS deal wasn't profitable. That was why GE got rid of that business. And by recording that net loss, made a significant impact on the quarterly loss for GE. As long as they can get rid of the drag, this business will shoot up, except aviation. Aviation is one that is dependent on the economy, how airlines are requiring new engines, how people are flying, and things of that nature. So if you remember in my last video that I spoke about the plans in preparation for this earnings report, I was showing you guys this chart here, which is aggregated on a daily basis on a 1-year scale. We have the 60-day moving average green line, and we have our support lines that I've drawn across. Of course, like I said, the last resistance line that GE reached was about $14 mark. It's still trading above the 60-day moving average. If you watch that video, you'll get to understand what I'm talking about here. But the point here is this, right? Let me zoom in a little bit so I can see how close it is trading to that line. It's pretty much still sitting on that line, which means, back to the point, that the impact of this earnings report will be significant on the stock movement and the price movement of the stock. If I move to 1 day, 1 minute chart, as we can see, we've crossed that 60-day moving average line, and it's trading well below that with a bottom now of about $12.91. I'm surprised it's still holding that high. Now, according to analyst consensus rating for GE, well, they gave an high price target of about $17, and somebody also gave a low target of about $5 with a median or an average rating of about $13.67. Now, this is a very important numbers to keep in mind. Of course, GE is not going anywhere close to $17 right now, and I don't see it going down to about $5 right now. Why? Because you have to understand the business that they are in. You see, aviation is picking up right now. It's picking up quickly and faster than we actually expect. And I believe that all of this will be priced into the current support level GE will have going forward. So going down to about $5 is not something that you would ever see. So if you want to buy it, don't wait until it tries to go down to $5. In my opinion, I believe GE will hold above $10. If it drops below $10, that will beat my own expectations. But I believe GE will hold above $10 and be finding maybe resistance around $13. That is my own opinion. Of course, I could be wrong and things can change. But back to the point. What are you investing for? Are you investing for the short-term gains or for the long-term gains? And how are you managing your portfolio? Are you putting all your money into a company or not? The goal is for you to manage your own risk, well-diversified portfolio, and make decisions not just on emotions, but on thorough reasoning. That means you think through the business, and if you understand the business you're invested in, you shouldn't be worried. The last time I showed you my portfolio, and I remember I was showing you guys that I was about 60-something% up on General Electric. Let's see what it is right now. So right now, General Electric is down for the day about $17, so about 2.5%, and I'm still up about 64%. With a current price of $13.24 at this point. My portfolio diversity, which I mentioned in my last video, is about 9.1% right now. My goal is to maintain a portfolio diversity of about 10%, which this has presented a buying opportunity. But am I going to buy it right now? I'm not going to do that right now. You know why? Because I'm going to wait for this dust to settle. This OGE earnings report is not a surprising thing to me. I knew this was going to happen. If you remember in the last video that I shared, I told you that there was 70% chance that GE will drop. And that is exactly what is happening right now. So I am not surprised. I'm well prepared by it. And I hope that you have a plan going forward. You don't have to follow my plans. My goal is just to inform you as to how I'm going about this. Check out my other video on GCAS and AirCap deal. And also check out my video on last GE preparation video that I talked about, how to trade the stocks going forward. And I'll see you next time.